of 2020 and 2021 within the tech sector dragged the market down. And that was a function of the fact that rising interest rates are affect most tech stocks. So explain that to me, why?
Tech stocks, from a valuation perspective, in a 0% interest rate environment, they're basically going to get from a multiple expansion. So tech stocks, not necessarily their earnings went up, but the growth, the multiples, a free money environment,
right,
that's the best for growth for tech equities. That's why you see what's happened the last few years, especially going, let's say pre-2022,
right,
tech stock had a massive move.
But zero interest rates, borrowing money for free for what? For R&D, for growth, for everything?
For investments, for M&A.
Okay.
They could raise capital. They didn't have to be profitable. They could just spend money and then continue to raise capital at 0% interest rate.
Okay.
Then all of a sudden, clock struck midnight.
Okay.
Once the Fed started cutting, then all of a sudden...
raising.
So once the Fed started, if you go when the Fed started cutting
years
ago,
right,
that's where this all started.
Okay.
Once the Fed started raising in the last 18 months,
right,
that's where the party was over for tech.
Okay.
They needed to buckle their seatbelt and actually show profitability. That's why 2022 was such a tough year for tech.
Right.
The difference this year, Pillsbury Doughboy soft landing.
Okay.
Fed's going to cut into next year.
Right.
10-year, you're seeing the pressure come off. What that basically means in tech, the new tech bull market has begun.
Okay, so think about it. So the companies in tech, so why is that different from just the regular like consumer staples or whatnot? Why is it particularly that tech would benefit from zero? I get it that they're borrowing money at zero interest rate and that fuels their growth and that fuels R&D and whatnot. Aren't other companies in other sectors also borrowing money at zero?
It's a great question. Other companies, other sectors are at 0%. The difference is growth. Where's the growth? Tech. Biotech, parts of healthcare.
Okay, like AI also.
So when you look at AI, artificial intelligence is the most transformational trend, in my opinion, in 30 years.
Okay.
So now, all these tech companies, it's a Game of Thrones going after this market in terms of AI. They were able to continue to spend money. Investors were fine with that as long as they showed the growth.
Okay, sorry to interrupt you. So you've got companies that have sort of been moving along down the road. You know, there's not that much innovation, but they're companies that have earnings, they've got good guidance, and there's small growth. Tech is the one that historically, whether it was the big bubble of 2000 or the growth of 20 and 21, that are the innovators, right? So that's where we see. So people are less likely to pound them about being profitable when they're growing new ideas and innovating the marketplace.
That's where the growth is, and that's why with tech, much more leniency from an investor perspective in terms of what they're willing to pay,
right,
as well as what they're willing to sacrifice in terms of red ink, losing money for the growth. The difference now is that once Fed starts cutting,
right,
that's when all of a sudden investors are like, okay,
the party is over.
Party's over. I want to start to see profitability. I think the best example would be names like Uber.
Okay.
Look at names like Facebook, Meta.
Okay.
Those are two great examples of companies where they saw the writing on the wall.
Okay.
They cut costs, went efficient, and that's why those stocks have been three-baggers.
Okay, so let's go back for a second here. So in 2020 and 2021, we saw zero interest rates, we saw huge growth in tech, and that was what took the market up 20 and 28% respectively in those years. 2022, inflation, supply chain issues take off, and we've got major problems in inflation. In order for the Fed to deal with inflation, they have to start lowering interest rates. Raising interest rates, that took money out of the system, right? So think about it. Inflation, everything's expensive. People are needing to be paid more to go to work and whatnot. So at the end of the day, in order to curb inflation, they had to take money out of the system, right? Money supply had to be drained, okay? So then you start raising interest rates, tech sector takes a hit on the chin because of that, and they start dragging the market down in 2022.
The leaders ultimately
become the dogs.
That's exactly.
Okay, the leaders of 2020-21 became the dogs of 2022, double-digit sell-offs that really decimated so many funds and so many portfolios down double digits. Then we come into 2023. We've had 18 consecutive raises. Interest rates are trading at 5 and change percent. We do get a handle on inflation to whatnot. And so you're seeing that tech, which had also flourished when it came for, recession. Let's talk about recession for a while, because everyone's been talking about it for a while, and I didn't really understand what it meant. I don't think that we can use the terminology we've used over the years, that because they're think about the terms that we use that are based on economic data, right? I think post-COVID, everything changed.
Agreed.
The terminology became irrelevant in so many ways. Like when you have a bull market at noontime and a bear market by the afternoon, a term like recession is irrelevant. But when they talked about recession, they said one of the reasons there was not going to be a recession was because one of the components of recession are major layoffs. So for a while in 2023, we didn't see those layoffs. And then suddenly they started to, and it started in tech. Is that correct?
The average tech company laid off anywhere from 5 to sometimes 12, 15% of workers in 2023.
Okay.
I think if you look at it, it's 250, 275,000 workers got laid off in the tech
In
sector.
that whole industry?
In the whole industry.
Okay.
And that's the difference is these companies were spending money like 1980s rock stars.
Right.
Go back to, 1980s.
By hiring people and by growth and
it didn't
fueling
matter.
growth. Okay.
Metaverse,
Right.
hype, wherever they were going to spend.
Okay.
It was going to be good money after bad. Then, once Powell and the Fed started raising interest rates, that's when investors were like, party stops, go efficient, tech
Let's
companies.
streamline down.
You go back a year ago, have big tech cut.
Cut costs and cut employees.
Cut
Labor force,
employees,
right.
cut R&D. Look at when you look at Zuckerberg and Meta, they essentially cut their metaverse strategy and really focused on
Right,
AI.
they almost bailed on the whole thing.
Exactly.
They did, in fact.
And then really bracing for a hard landing. That was really...
What does that mean? Because I don't know if the public understands soft landing, hard landing. We know what it means when you're on vacation and you're in a plane and you've had too many cocktails and you're running into turbulence. But explain it to me.
That's another good example of a hard landing. A hard landing is basically what I'll call a recession on steroids. That is just a horrific recession, very bad GDP growth, unemployment goes to 6-7%.
Okay.
And I'm not going to compare it to a 2008 financial crisis.
But what would cause a recession? Give me what are your components?
Fed continues to raise rates.
Okay.
Unemployment starts to tick up.
Okay.
Credit cards go up in terms of what investors, what consumers
So the
are
economy per se, the individual basic Joe and Mary are economically in trouble.
Well, especially the housing market. I mean, because the housing market's so key. You can't afford a house. 3% interest rate versus 7 or 8. Now it's a totally different story.
Okay.
So the view is that we're going to have a hard landing in 2023 going 2024.
Do you think, but they kept saying, sorry to keep interrupting, but I'm trying to understand it because these terms everybody throws at us as if we're supposed to really understand them. I'm not clear the terms are explainable as they used to be. So we didn't have a recession in 23, even though they kept saying there was going to be one, right? So, but we did see a major layoffs in tech. So what's kept us in 23 from having a recession? Are we going to have one in 24?
A healthy consumer.
Okay.
Unemployment that stayed low.
Okay.
Enterprise spending that actually has held up pretty well.
Okay.
And the reality is that unless you have a telescope from a planetarium, it's hard to find this recession. And that's why the Fed, despite all the noise, this plane's coming in nice and soft into this landing in 2024, and you got to give a lot of kudos to Powell and the Fed for doing it.
You do, and I've been a fan all along because I call myself a forensic broker in that I don't predict things and I don't advise people about, and I don't say what the market's going to do. I try and explain why the market's doing what it's doing, and when people talk about it, whether you can able to get from inflation from 8 to 2, look, every notch down from 8 to 2 is progress. It's not perfection, but it's progress. So at the end of the day, the market is also telling us, everyone keeps saying, well, where do you think the market's going? Everyone thinks it's going. I said, the market is telling us that there's an appetite for stocks. We've seen a beautiful breath. The Russell went from a 52-week low to a 52-week high in 46 days. That means small cap, mid cap stocks are now suddenly desirable.
And that's the difference, is that the Magnificent Seven, the big tech stocks.
Right, Google, PayPal, Tesla, Facebook,
NVIDIA, the
Meta,
godfather of AI. Now, going into next year, to your point, Now, mid cap, the rest of tech,
Right.
that's what the bull market in the next year.
Okay.
It's going to be the rest of tech.
Okay.
Small, mid cap. I think what we saw from the Russell,
Right.
and we saw a small cap in December,
Right.
little sneak preview of the party that we're going to see in tech going in 2024.
Okay, so think about that, everybody. We're coming into the end of 2023. We've got a handle on inflation. Interest rates, for the most part, are basically, they've told us that they're going to basically stop raising interest rates. So for the first time this past Wednesday, Jay Powell actually tossed on the table the idea that we may have 3 interest rate cuts in 2024. That's only going to fuel the demand for these mid-cap and small-cap tech. So that means that we're looking at a really positive 2024 as far as you can see.
And what that basically means is that you go from defensive mode, owning defensive names. You know, if you think about like from an energy
Conservative
perspective,
investments, right.
conservative investments.
Right.
Once the Fed starts cutting, you go from the right lane in a minivan,
Right.
going like 50 miles
Right.
an hour, into that Corvette left lane,
Exactly.
going about 90.
Okay, that's beautiful. What do you think about tech? Hey, you, come here. Talk to me.
So what do you think about
Yeah,
tech
this
stocks?
is Dan Ives, #1 tech analyst
Hey,
in the
nice to meet
world.
you.
What's your name?
Dennis, nice to meet you.
How you doing, Dennis? What do you think?
What do you think about tech stocks?
Are you invested in the stock market?
I am.
Okay, what do you like?
I like ETFs.
Nice.
ETFs. Okay, like what sector?
I like the broad index, S&P 500.
Where are you from?
Germany.
Germany. Okay, cool. So you're invested in our market, not in the
Invested
DAX.
in
Are you
the-
invested in the?
I'm invested in the global markets.
Okay.
Vanguard.
Okay.
The old world.
Okay.
I'm invested in all caps, small caps.
Okay, cool.
caps, large
And are
caps.
you happy? What do you think? What did you predict this great rally in 2023? Are you all in?
I am all in, but I'm also into crypto a little bit.
Oh, you're into
Okay.
So what's your view of Bitcoin?
I mean, I see it as digital gold, not
Yep.
as a currency.
So you're seeing it as a safe harbor, safe haven investment against a hedge against the market?
I mean, it's very volatile, so I don't.
It's not that safe.
Exactly, it's not that safe. So
Right.
Not 100% of my assets are in Bitcoin. So it's
How much do you have in gold?
in gold?
Yeah,
Not too much.
not so much. More crypto than gold?
Yes.
Okay.
Yeah. But just because I don't have gold, you know,
Okay.
that's because
But do you also think the price action on Bitcoin, especially the last like 6 weeks, that's pretty positive, right? In terms
it's
of
really
what-
positive.
Yeah.
I really like it. Yeah. So when I was at 15,000 euros,
Right?
everybody was thinking. My boss was thinking.
You're crazy. What are you
I'm
doing?
crazy,
You're
what
wasting
I'm
money.
doing, and I said,
Right.
now it's the time to go in. So I took my salary and put a lot of
In
money
Bitcoin. So don't. I
But
kind
I'm
of
young,
think.
so I like to risk a lot.
Yeah. Well, you should be risking at this
I
point in
wouldn't
your
tell
life.
a 70 years old guy, you know,
Sure.
so it's very different. Yeah.
Well,
You're
good.
you're like the guy who's.
I'm the guy.
You're the guy.
I'm the guy. I'm well known in Germany.
Coincidence.
Yeah, absolutely.
He's the legend.
Yeah. I've had TV shows in Germany for many, many years.
You're very famous, yeah. That's
Yeah,
why
yeah.
I took so many photos.
Oh, cool. Well, that's cool. Well, we're doing a new show. This is a new YouTube station. It's called Einstein Ives. This is Dan is a analyst for Wedbush. He's in the tech
Start
sector.
covering tech
So he's a tech sector analyst. So we're just trying to talk about tech and what people think about it and stuff like that.
Where do I find the video? What do I?
We,
Einstein.
Einstein
on
and Ives.
YouTube.
You'll see it. It's going to be on Money News Network. So
Money
that
News
should become, or my own station.
Actually,
No,
maybe
we're just starting.
Actually, if he keeps his investment, he might have his own show in Germany.
Well, you may.
Yeah,
We'll
Might.
see.
Let's see.
He might.
Good to meet you.
But nice to
Thanks
meet
for
you.
coming.
Nice to meet you.
Great opportunity.
Yeah, great.
to talk
Cool.
to you guys.
So we're going to wind this up. Come here, Maddie. Okay, so I think we've given a really good breakdown into what happened 2021 too, what happened in 22, the sell-off. In 23, a really beautiful market. I think this was a constructive
It
year.
was a Picasso-like market,
Picasso,
especially,
yes.
especially if you're a bull.
Yeah, of
If
course
you're a
bull.
bear, you're
Well,
deep in hibernation mode, and you use your 22 playbook for 23, and now it's a new year, and you have a reevaluate.
Okay, but let's say you've been a bear this whole year. At what point do you just bite the bullet and go, I was wrong? It's so funny how there are bears. Look, you've seen them, the guy Schiff. There are a bunch of guys who are inveterate bears. And I always wonder, they've been bearish for 3 years and the market's done nothing but go up. At what point do they just say to myself, I'm wrong?
And you can be bearish and then tactically bullish. The problem is that after this year,
How can you do that?
but I'm saying after this year,
Okay.
as a bear,
Okay.
you got to look in the mirror and realize This is a different market. As you said, post-COVID, it's a lot of different dynamics.
Right.
And the Fed, despite all the jawboning and all this
Right.
sort of noise, it's a Pillsbury Doughboy soft landing.
Okay, so let me ask you then. So we're coming into 2024, 23, it's in the record books almost. You and I are going to do a market wrap at the end of the year. That should be fun to really give us a good perspective. Yeah. What do we see for 2024?
Tech stocks we see up 25% in 2024.
You're going to see 25% in the fabulous 7 or all across the board?
So we have 25% that tech's up, magnificent 7 up 30%.
Really?
We actually think the strongest subsector is going to be cybersecurity. Software,
okay.
that's where enterprise spends strong. You want AI. Look, AI is generational. We view it as a 1995 moment, nothing we've seen since the start of the internet. It's going to be led by Microsoft, NVIDIA, but now MongoDB.
No bubble in AI.
We view this so far away from a bubble because of the actual spending and use cases.
Okay, wow. That's fascinating. So AI, look, for me, AI is fascinating. I see it a little bit as of a dangerous sector, I think, from the investment point of view. Well, I mean, what do you really think about it? I mean, what is its best case scenario that it's going to do for us in general?
But to your point, I think you also have to separate the winners. Just because someone says AI as a company,
it's not all just one big.
So you got to do your work as any investors
right.
out there. Do your due diligence. Pick your names, pick the valuations. But ultimately what it's going to do is that there's so much data that's created. I think if you sum it up, there's so much data, consumer enterprise data.
Right.
This is going to take data that was never able to be used.
Yes.
And it's going to make it intelligent.
What field do you think will benefit the best and most from the AI craze?
I think financials, banking.
Okay.
I think healthcare is going to.
Yeah.
I think healthcare.
Yeah.
Some of the discoveries and some of what we're going to see in healthcare is going to be, I think it's going to blow our mind.
It's going to blow our mind. So we're talking about artificial intelligence. We're talking about taking data that used to be done manually by a brain, then it was done by machine learning and a computer, and now we're going to be taking actual intelligence that's going to learn from itself on steroids and be able to predict from a medical perspective. Let's say you're going to be able to analyze 1 million cancers and see what possible treatments or what things are like this. Or if I go in for an MRI and I'm going to be able to be analyzed from 1,000 different people who had similar diseases to me or something like that, right?
That's exactly. And the use cases right now, they're exploding.
Exploding. What about from finance? Are you fearful that AI is going to be able to do the analysis that you're doing, Dan Ives, on your own on a Saturday night in your study?
Look, I think AI is actually in the near term is a job creator.
Okay, I like that.
Now,
yes,
over the
I agree with
term,
you.
Will there be some jobs that go away? But it's going to create other innovations. So from my perspective, as someone in this spot, you just continue to stay,
ahead of the
curve.
Yeah.
I think that's the best way to.
Okay, I love it. It's getting really cold out here. We're going to stay ahead of the curve.
But yet hot in the market.
Hot in the market, ahead of the curve. I'm here with Dan Ives, Einstein Ives. This is the beginning of a whole new experience. We're going to be talking markets, talking food, finance, fashion, kicking ass, taking names. I love you all. We're out of here. Like Vladimir. See you later.
Take care.
There you go.